Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of the global economy with key releases in the US, Europe, China, India, and Japan. The latest updates on the US economy generally painted slow but steady growth. New orders from durable goods rose, inflation forces eased, but the housing market remained stressed under elevated interest rates and home prices. The U.S. GDP growth was slightly revised higher to 1.4% annual rate. The personal consumption expenditure price index in May slowed to an annual rate of 2.6% from 2.7% in the previous month, the Commerce Department reported on Friday. On a monthly basis, the overall PCE price index was unchanged. The core price index, which excludes food and energy prices, also increased 2.6% from a year ago and 0.1% from the last month. Investors have been eager to parse inflation data as they try to determine when the Federal Reserve is likely to begin lowering interest rates. Single-family new home sales in May declined 16.5% from a year ago to an annual pace of 619,000, the Census Bureau reported Wednesday. The home sales rate declined to the lowest pace in 6 months after high home prices and mortgage rates negatively affected home affordability. The median home price of a house sold in May eased to $417,000 from $421,200, and the average home price rose to $520,000 from $495,800 a year ago, respectively. Meanwhile, the number of homes available for sale at the end of May was 481,000, representing about 9.3 months of supply at the current sales rate. Across the Atlantic, inflation decelerated in Spain and France but held stable in Italy, and the UK's GDP growth was revised higher to 1.4%. In addition, the number of jobless people increased for the 18th month in a row in Germany, and jobless rate rose to 6% in June. In Asia, Japan's industrial profits and retail sales rose more than expected, and Tokyo area's core consumer price inflation also increased faster than 2% target set by the Bank of Japan. China's industrial profit in May decelerated sharply, indicating fragile economic recovery, and India's current account balance swung to a surplus after exports rose faster than imports. Let us review key events in global bond, currency, and commodity markets last week. The yield on 10-year U.S. Treasury hovered around 4.3% as the latest updates on inflation suggested that price pressures are slowly waning, which could convince policymakers to lower rates after September. Crude oil price in Texas rose 3% to $82 a barrel and extended gains for the third week in a row as escalating tensions in the Middle East overshadowed the demand growth uncertainties. Natural gas prices eased from a 6-month high of €35 per megawatt hour as traders weighed the ample storage against the limited global supply flexibility amid rising demand in Asia because of extreme hot weather conditions. The euro edged lower and approached a 2-month low of $1.06 after inflationary pressures weakened in France, Spain, and Italy, easing pressure on the central bank to lower rates in the near future. The yen crossed 160 against the US dollar and approached the intervention level as Bank of Japan policymakers remain divided on supporting the currency. We now shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and the Nasdaq composite advanced for the 4th week in a row and reached new record highs and extended gains in the second quarter June and in the first half. European markets diverged as French political turmoil in France and the UK overshadowed market sentiment ahead of the parliamentary election over the next few years, starting June 30th. The Nikkei 225 stock average extended gains for the 3rd week in a row, and retail sales, factory output, and Tokyo area inflation generally met expectations set by economists. Hong Kong indices struggled and amid rising trade tensions with the West, sustained capital flight, and a lack of recovery in the property market. Indian market indices extended gains for the 4th week in a row amid economic growth optimism and sustained allocations for infrastructure development in the upcoming national budget. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Nike plunged 18%, and athletic shoemaker reported weaker than expected revenue in the latest quarter. The retailer also estimated revenue in the current quarter is likely to decline by 10% and fiscal 2025 revenue to fall in the mid-single digits. In Finera, the optical networking company located in Silicon Valley, agreed to be acquired by Nokia for $2.3 billion. Walgreens Boots Alliance plunged 25%, and the drugstore chain operator reported it plans to close a significant number of underperforming stores in the United States and announced weaker than its estimated earnings outlook. Levi Strauss dropped 19% after the jeans maker reported weaker than expected quarterly results despite the current strong demand for denim products. Micron Technology declined 5%, and the semiconductor company reported better than expected quarterly results. H&M dropped 13% after the Swedish retailer reported a smaller than expected increase in second quarter net income. Nordex, the German wind turbine maker, said it plans to restart its production in Iowa, United States. FedEx, the parcel delivery company, reported better than expected revenue and adjusted earnings in its latest quarter. Rivian soared 29% after Volkswagen said it plans to invest $1 billion in a joint venture with the electric vehicle maker and increases investment to as much as $5 billion over the next several years. RXO soared 10% after trucking company said it plans to acquire Coyote Logistics, a freight brokerage business, from UPS for over $1 billion. Next week, investors are looking ahead to the release of several economic reports. Non-farm payrolls are expected to increase at a slower pace of 180,000 in June after expanding at 272,000 in May. Investors are also looking forward to the so-called JOLTS report, and labor market conditions are expected to moderate but still remain tight. International trade balance, factory orders, and private sector employment data are also scheduled for the next week. In Europe, political developments are going to take center stage, with two opposition parties, the National Rally and the New Popular Front, are likely to win most of the seats in the first round of French election this Sunday. In the UK, the Conservative Party is likely to lose power after being in the office since 2010. In Asia, China is scheduled to release business activities survey, and Japan is set to release its business confidence survey across industries. The Bank of Japan is likely to conduct second market intervention in as many months after the yen dropped to the low not seen since 1986. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next.